Hey everybody, welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. It is Thursday, November the 30th, 2017. Hope everybody had a great trading day. We had a fair amount of movement today, and we are going to do what we do each and every day here on the Daily Market Commentary. Take a look at the same futures markets and leaving our lines on the charts to analyze some of the positions. Now, interesting thing about what we have today is a lot of some of the stop loss movement that we talked about in yesterday's video came into play today. Remembering that rule number one is don't lose money, right? So we actually did well by being prudent in our fairly weak levels yesterday, and you'll see what I mean when we get to gold and the yen. So let's dive in. So starting with the S&P. The S&P 500 today, strong rally up. Got as high as 2658, has pulled back to 2644. We're about 15 minutes away from the close of the market. I think that we, by virtue of today's very strong move up, have put in maybe a good buying opportunity on a decent little pullback. I'd love to see a pullback into kind of this range right through here. I went down to a 15-minute chart just to make it a little bit easier to see in this range right there. So I'm going to highlight this, and we put our smaller time frame areas typically in a purple color because this would be a smaller time frame level, so slightly lower probability on the scale. The thing I do like about this is that it's at that area. I talk about the old ceiling becoming the new floor kind of concept, and that's really what's happening through here. Is that we had this prior all-time high. We then broke out above there. It was a breakout trade. So those of you that were taking the breakout trade were very well rewarded today. On this move from that region. So this area down here is still valid. I just don't think that we're going to get there anytime soon, as we had a very, very, very strong rocket up. Nasdaq. So the Nasdaq, after yesterday's really, really steep drop in the Nasdaq, we had a very strong rally today, but we did not rally today as high as we dropped yesterday. And yesterday's drop, we talked about it, was spearheaded by Apple and Facebook had a very strong drop yesterday. Netflix had a very strong drop yesterday. Some of the big boys, Amazon had a big strong drop yesterday, but they didn't recover back to where they were. Those are the FANG stocks that everybody loves to wax poetically about, if you will. It's a slightly underperforming market, just simply based on what the S&P has done. But there's really no positive turning points for where I would look to be a short, to short this thing as we speak. I will tell you though, as I look at something like Netflix, and maybe this pullback could be a good buying opportunity for those of you that are individual equities traders and you're trading options around some of those positions. That is something to kind of keep in mind. I was actually talking to a friend of mine today about some options positions, and one of the things that we talked about was the opportunity to pick up some of these highly bullish securities at a discount and maybe take advantage, of the frankly the stupid low volatility that we have. So there is some opportunity out there if you're trading some of the individual issues and individual securities. I'm working on, by the way, a way to kind of go over individual securities on a fairly regular basis in kind of a live room scenario. So stay with me. That's coming soon. All right, let's go next into crude oil. So crude oil, I kind of like this area right up here in crude oil. It's this little bit of a basing before that drop in through there, and that basing before the drop is really what I'm paying attention to. That little bit of basing is going to be pretty useful if we do run back up into that area. So, it really depends on your risk parameters. If you're looking at this area right up in here, I got a little bit burnt in oil earlier this week, so I'm actually a little gun shy on it right now, just because we're still kind of in that basing period. I'm going to, moving this out to the daily chart, we definitely have that rising trend line right through here. So I'd be kind of, I don't know if I want to be shorting that thing right now. For those of you that are trend line followers, if you connect those bottoms, and you get this little outlier here, but we basically have a rising trend line here. And that momentum, I'm going to throw a little momentum study on here. Just very simply, the MACD momentum. One of the things that's interesting, though, is that I am having slightly lower momentum. So I've got higher swing highs, in price, but lower swing highs in momentum. Now, I don't ever make my decision based upon the indicator, but the indicator, like look through here where we had higher swing highs in price and higher swing highs in momentum. We got a little pullback, gave us a buying opportunity, boom, price goes up. Higher swing highs in price, higher swing highs in momentum. Whenever we have lower swing highs in momentum, but higher swing highs in price, that typically is a signal for a reversal. And there is something to be said for, going back even to a weekly, we do have a little bit of some noise up in here, but for the weekly, I'm going to want to go back a bit deeper, and look a little deeper into there to make sure that level works out. So take a look at that yourself, see what you think about that as an opportunity. Let me get rid of all these studies. All right, now gold. Let's talk about gold for a minute. Yesterday, we talked about moving our stop in gold to break even, and that it was getting fairly weak, which is exactly what happened. We didn't like the arrival into this area. I said as soon as it comes back up into here, you move your stop to break even at a 1-to-1 reward to risk or take some profits off the table, and that's exactly what happened. Failed through the level, but I don't consider this a losing trade simply because we had a plan of how we were going to manage it before that happened. And having a plan before it happened allows us to really manage the trade a lot more effectively. Now, that being said, I will tell you, I left the lines on here, even though we had talked about it yesterday, because I still like the region. I just like the region for a different purpose. I like the region now right here as a very strong selling opportunity. I think we have a pretty good selling opportunity in here. Now, certainly we've seen money go away from gold as the market rallied up. So if you're long the market and you're using gold as a hedge, then it was a good play because you're probably still doing okay. But now you've got a good shorting opportunity, I think, up in here. We could actually reverse from where we are right now, and you could use candle to candle trading to take this thing on the next ride down. Looking at the bond markets. So let's go to our bond markets first. So looking at the treasury note, we had put in this area yesterday. Unfortunately, we were not able to get back up to that region yet. Just kind of chopping around. So this area still remains intact. Haven't gotten a lot of trades off in that market lately. The Aussie, same way, still between our levels of support and resistance. In the euro, once again, same way, still between our areas of support and resistance. We've not come into either one of those as of yet. I do believe, though, that we could have a potential breakout level. So you could take this line right here as a breakout short. So I'm going to keep that. I'm going to put as a dashed line just to remember that it's not as highly probable, but it is one that does stay on our radar screen. Now, Canadian dollar. Canadian dollar's coming to its breakout that we had talked about, months ago. So keep this one in mind. We are almost to that level now. Remember that our stop would have to go above the last pivot high. If we broke out right now, my stop would have to be way up here. So you determine your risk tolerance on what you're going to do. Remember, your stop goes above the last pivot. On a breakdown, it goes below the last pivot on a breakout to the upside. So right now, that would put your stop pretty far away. So it depends on your risk tolerances as to whether or not you would take that particular trade. Last, but certainly not least, the Great British Pound. We have our level. We talked yesterday about how it was giving us an opportunity to be bullish. It didn't pull back. We talked about some of these levels down in here that but we didn't pull back to any of these levels. So I don't want to go chasing. Chasing is not what I want to do. We are at the bottom of that trend channel, and it's going to continue to kind of head up. And like I said yesterday, I think it could get eventually to this 1.4 region pretty easily. The Japanese yen. So let's talk about the yen. Yesterday we talked about the yen, and I talked a lot about if it doesn't have a lot of strength coming out of there, then we're not going to want to hang around, right? We want to see strong movements coming out of there. And I said this is fairly weak. We're going to move that stop up to a break-even point, which is exactly what we did. So there's no reason why this level, though the level didn't work out, you should lose money on that, because it certainly fulfilled it did what we thought it was going to do. And so in being so, I've got to remove that one from my areas of opportunities. I would use this area here if it wasn't already eating away at some of this stuff in here, which, by the way, is a former resistance point in this region. So right now, I don't have anything on the Japanese yen that I'm really looking at that's very highly probable. So with that being said, I'm going to turn this thing off for the day. I hope everybody had a great trading day. If you've got any questions, feel free to reach out. Chuck@iiefinancial.com. I appreciate your time, and I hope you all have an amazing, amazing day. Talk to you soon. See you.